Welcome to everyone who's joining us, who's watching this on July the 7th on Global Lifting Awareness Day, and to those who are watching it at a later date. A particular thanks to colleague Neil Golding, who is Director of Market Intelligence at the Energy Industries Council. We're extremely grateful to Neil for taking the time to present to us today. And as we all know, over the last 2 years, the lifting industries are set on all sides by economic ups and downs, and particularly at the moment, all things energy are high on everybody's agenda, and are a key market for members of LIA and others who are working in and around the lifting industries. And so we're really excited to hear from Neil as he reflects on and gives his very best guesstimates on what's going to be happening in energy markets over the next few years. So I will turn over to you, Neil. We look forward to hearing from you. I'm going to switch off my camera so that I don't look like a disruptive influence. And the time is yours. Thank you again.
Thank you ever so much, Ross, for those kind words. And as Ross mentioned there, I'm Neil Golding, Director of Market Intelligence. And over the course of the next 30 minutes or so, I will be giving you a review of the energy landscape as we see things and what impact that is now having on the project landscape going forward. And so how am I going to approach this? Well, first off, I'm going to take a look at the 2021 and 2022. What have we seen to date across a number of sectors? I'm then going to look at that kind of forward-thinking piece of work as well. What's the landscape going to look like for oil and gas going forward, and what with the circumstances that we're seeing in Ukraine, the tragic circumstances we're seeing there, that is having a big impact on this particular sector. I'm then going to do a deeper dive on the offshore wind sector, and then follow that up by looking at hydrogen and carbon capture sectors as well. Many of you will be aware of how we're seeing some significant growth in these areas. So first off, let's take a look really in terms of what we've seen over the course of 2021. And as things happen so far, we have seen to date, sorry, let's start again on this. What we're looking at here are the number of projects that have been proposed in 2021 on CapEx and ABEX projects. So in 2021, we saw a total of 2,537 projects. That compared with 1,800 new projects announced in 2020 and 1,250 in 2019. So we continue to see growth in the number of new project announcements that are being made across all energy sectors. Renewables made up over 50% of those new project announcements. And with the inclusion of offshore wind, the number is 58% of new projects added into our proprietary database EIC data stream were renewable developments. This was driven largely by announcements in the commoditized renewables of onshore wind and solar PV in particular. Now, energy transition, and so for the purpose of this presentation, we're looking at floating offshore wind, carbon capture, hydrogen, and energy storage. And in total, that represented some 14% of total projects announced. Those sectors represented 14% of total projects announced in 2020. Now, you will see on the right-hand side of this that actually we now see that of the projects that were announced in 2021, 22% of those projects were what we term energy transition projects. And the biggest growth for those was seen in hydrogen and energy storage. Move on to then 2022. And what have we seen so far up to the 20th of June? Well, so far we've seen over 1,300 projects that have been added to our database up to that date. Renewables make up almost 50% of those projects, 49%, and with the inclusion of offshore wind, the number is 56% of new projects and added into EIC data stream being renewables. Again, this has been driven largely by announcements in onshore wind and solar, but we have seen some sizable growth in the number of announcements that have been made in the offshore wind sector. More on that a little bit later on. For the energy transition sectors, we see that taking those projects taking up a greater proportion of the number of announcements that have been made as well, and they represent 25% of the projects that have been announced. That's actually more than we're seeing with the mature hydrocarbons and power sectors. And in line with commitments that we saw from COP26 around new build coal-fired generation, we've yet to see any new proposals made for new coal-fired power plants, despite the fact that coal-fired power plants are beginning to look as though they're going to get switched on once more to meet the energy security needs, our energy needs, sorry. The biggest growth in energy transition, once again, has been seen in hydrogen, but also energy storage. And we have seen already the number of announcements that have been made in the floating offshore wind sector reach the same levels as 2021. So if I now next move on to the next slide. What I'm trying to show with this particular slide is that the energy transition is very different in whatever market you are looking at. So for example, you will see on the image on the left-hand side here, that Europe is punting and investing an awful lot of money into mature renewables and clean tech, again, made up of onshore wind and solar projects, but also a number of announcements in offshore wind. The energy transition sector, driven by the desire to meet increasing demand for clean fuels, is seeing a lot of investment, again, in hydrogen, both green and blue hydrogen. But we see very few announcements in the mature hydrocarbon and power projects specifically. However, when we compare that with the Middle East, which of course is formed of many of the OPEC players and major producers, we see that mature hydrocarbons and power represent some 63% of the projects that have been announced to date. Energy transition as well is going to have a big role to play, with many predicting that the Middle East is going to be a significant player in hydrogen production going forward. You being able to utilize the vast resource of renewable technology that it's going to start building primarily through low-cost solar. However, the number of the projects in that sector still is relatively low. Not much demand for onshore wind due to a poor wind resource, and certainly very few announcements in offshore wind. That 15% that you're going to see in mature renewables and clean tech is very much dominated by solar PV. I'm now just going to very briefly take a very quick look at what we've seen in terms of the renewable sectors in the number of announcements that have been made year on year. And the growth has, these first two graphs on the left-hand side here, are very much showing that the growth has been driven in commoditized renewables in developed markets in Europe, North America, but we're also seeing some notable growth in South America as well. Solar is expected to see a similar number of projects announced in 2022 as we saw in 2021. Whilst in onshore wind, we have seen a slowdown in the number of commercial scale announcements that have been made during 2022. And this could be, and one of the reasons for this could well be the announcements that have been made by a number of turbine suppliers who are making significant losses at the moment in this particular sector. And then on the left-hand side, what you see on the right-hand side, what you see is the number of projects that have been announced between January 2014 and June 2022 for offshore wind. Ever increasing number of developments being announced in the sector as the cost of the technology comes down and more markets look at the opportunities in fixed bottom developments specifically. The number of offshore wind farms announced so far this year is currently just shy of the total number of developments that were announced in 2021. Europe and Asia lead the way in the number of announcements being made, whilst we've also seen an ever-increasing number of developments proposed in Australasia and also South America, driven by Brazil in the main. So now just to take a look at the energy transition sector, and in particular, I'm looking at energy storage, hydrogen, and carbon capture. We've seen an increasing number of commercial scale developments in energy storage being announced globally. That's 20 megawatts or up for us in terms of what we track, which often go hand in hand with the new large-scale solar and wind projects, especially in the US and Australia. North America, Europe and Australasia lead the way in terms of these new announcements, with US, Australia, UK, Chile and Germany certainly leading the way in a number of announcements that have been made. Now, the battery technology is the dominant technology, but we're also now seeing new technology, compressed air energy storage, liquid air energy storage and thermal storage as well, being seen in US, Chile, Canada, and most notably in Spain for liquid air energy storage going forward. In terms then of hydrogen, well, during 2021, we saw over 170 projects announced. The scale of these and size of these projects being announced much larger than earlier announcements being made. And this year we've seen just shy of 100 projects being announced across the globe. And we look on track to surpass the number of developments announced in 2021. It's worth noting that it's mainly green hydrogen, and that signals that investors and clients do want authentic hydrogen from renewable powered electrolysis. But blue hydrogen will have a role to play, and we've seen significant projects that have been announced in Europe and North America, which, not surprisingly, is where we also see the largest number of carbon capture projects as well. In terms of carbon capture, it's quite an interesting technology to look back on. Of course, it's not new technology by any stretch of the imagination, but it does have a checkered history of government policies supporting and then reversing that support. And as a consequence, we do see that the supply chain remains nervous because of this. It is, however, recognized that decarbonisation of industry cannot happen without carbon capture. And we've seen a significant increase in the number of proposed projects during 2021. The number of carbon capture projects announced to date is already at a similar level to where we saw 2021 levels. And our estimations are that we'll probably see the number of projects announced in 2022 surpass those only by a small amount of those announced in 2021. What I've also want to note here is that we're now seeing an increasing number of projects announced in the APAC region, and that is largely because of the decarbonisation of the upstream sector, and specifically around Malaysia, Indonesia, in those markets which have high CO2 content levels in the gas that's being produced. And what of oil and gas? What I've done here is take a look on the first graph at the number of new announcements that are being made across all of the oil and gas sectors. And what is becoming clear is that the number of announcements is still relatively low, and we haven't seen much of a bounce back from the pre-pandemic levels. That said, what we have begun to see, and although it's not illustrated by this image, is a number of projects becoming live again, projects that were previously put on hold. And so we are beginning once more to see developments that have perhaps been pushed to the right, becoming active once more. But one area where we are seeing increasing activity, and it is closely linked to the oil and gas side of things, is the biofuel sector. And that's the middle graph here. And what we've already seen is the number of new announcements made in 2022 already surpassed those that were made in 2021. Biofuels, just for info, also is covering the sustainable aviation fuel and synfuels, which are all clean technology that are linked to the processing of biomass for the production of liquid fuels. And that's where biofuels will continue to grow and have an important role to play, because liquids and the replacement of oil is a challenge in hitting net zero targets. What we are also beginning to see, and certainly saw in 2021, was a pickup in the activity regarding final investment decisions being reached. And we saw some very notable announcements made in Australia, Scarborough Gas Field, Pluto LNG Train 2, just to name two, and the Bacalhau project, a significant oil and gas project in Brazil, was also reached FID. We move forward to 2022, and whilst the numbers look relatively low, what we have seen is some sizable projects reach final investment decision, certainly over the course of the last couple of months. And notable projects to reach this landmark include the Ballymore oil field in the Gulf of Mexico. We've seen the Crux gas field in Australia, and we've seen two very sizable LNG liquefaction projects reach a final investment decision in the US. Most recently, Corpus Christi Phase 3, but prior to that, we saw the Plaquemines LNG project being developed by Ventures Global, also reaching FID. And I previously mentioned biofuels, where we've just seen a final investment decision as well made on the $1.25 billion Rodeo Renewable Diesel project. So all is not lost, certainly with oil and gas. And it's in fact oil and gas where I'm going to begin. We are beginning to see a demand recovery for the fuels since COVID, and that's largely driven by the energy security issues that we currently have and face, given the impact of the war in Ukraine at the moment. Energy security is critical right now for Europe, and a little bit more on how we're seeing the market evolve in Europe and other markets in the next slide. But as mentioned previously, projects that have previously seen little sign of activity and now moving forward once more. We had seen a pickup in drilling operations as well, both onshore and offshore globally, although that is beginning to plateau a little bit. Although that said, rig contractors are still looking at a decent order book going forward in the coming months. No major has made the step yet to walk away from the industry as well. What we have seen, though, are the likes of BP, Shell, and others look at focusing more on their offshore portfolios as opposed to onshore portfolios. And then one country where we've seen that change has certainly been in Nigeria. In terms of new drilling, it's been limited. And so frontier exploration has been relatively low, although there are some big successes, Namibia being one of the most sizable markets to emerge over the past few months. And we're also going to continue to see decarbonisation in the industry, whether that's utilisation of carbon capture technology, or alternatively, electrification. So replacing out of existing gas turbines and diesel turbine generators on platforms for use instead of cleaner fuels, or alternatively renewable fuels as well. And right now, where next for the oil price? Some thoughts that $100 plus is here to stay for a significant future. OPEC has been called to fill some of the capacity gap that has been seen through the issues that we're facing currently with Russia. But of course, OPEC countries are extremely happy with the high oil price that they're seeing at the moment. So it remains to be seen what will happen with that oil price over the coming months and years. And I mentioned previously energy security, which is having more of a critical role, and has been talked about more and more, certainly in Europe at the moment. Gas has historically been seen as the transition fuel of choice. We have seen a gas supply crunch globally very recently, again, emphasized by the Russia aspect here. And that, as a consequence, has led to LNG prices on the spot market ever increasing as a number of economies look to source their gas from the global market. What we have seen, certainly again in Europe, and Germany and Netherlands are two great examples of this, projects with regards to LNG regasification facilities that were previously pushed to the right, now coming back to the fold and moving forward as Europe really does look to move away from Russian gas. We are also, as a consequence, that LNG has got to come from somewhere as well. So we're seeing the fast tracking of developments as well globally, and in particular around the FLNG piece. And why is it good? LNG or gas as a whole, speed to market, it's relatively quick versus other technologies to get into pipelines, and the infrastructure exists already in the bulk of the demand centers, but it also, of course, can be blended with hydrogen. So it has that critical role to play going forward as well. And nuclear, all of a sudden, has a seat at the table. in terms of the fact that it's been recognised as having a critical role to play in the future, albeit it's going to be a little bit longer to see new nuclear facilities come into the fold. But prior to COP26, there was recognition that we needed to double capacity in the nuclear sector to help us meet our net zero targets. And actually at COP26, we saw nuclear for the very first time get a voice at the table. What we've also since seen is a European coalition really lobbying for nuclear to receive green designation. And we've also seen the same in South Korea. As mentioned, though, the time to market for new developments is going to take a while, but and I see potential for growth and significant opportunities for many of those of you involved in the lifting sector will be in the small modular reactor industry, still very much in its infancy. But these developments, which are typically going to range from anything between 350 megawatts to up to 500 megawatts in size, will be modular in nature, and will probably comprise, certainly the Rolls-Royce one will comprise of upwards of 3,000 separate modules, all built in factories to then be transported to site when they'll be all assembled. So an exciting opportunities within the UK, and we're bound to see some significant growth in that area. But comparative to that, to Canada, we are very small in terms of the opportunity. Canada, for example, is expected to see 200 small modular reactors constructed. So exciting market, and we will see others follow suit in utilizing this clean technology going forward. What I briefly now want to quickly touch on is some of those major projects. This is just the map that outlines some of the major projects that we've seen announced and where there are real opportunities for the wider supply chain. I mentioned Namibia earlier. You have the Venus oil discovery, which has the potential to have in excess of 13 billions of barrels of oil equivalent of recoverable reserves. Now, we're waiting for further appraisal drilling to happen on that, but that would make it one of the most significant discoveries in recent years. We're beginning to see contracting activity move forward in a number of projects as well. Bonga North Tranche 1 by Shell is one such example where we're seeing EPC tendering activity start once more. And we're seeing in Libya as well projects on the A&E structure, which were previously on hold, once again moving forward, and that's the NI that's pushing forward with that particular development at the moment. Further afield in Papua New Guinea, as an example, we've beginning to see work move forward on the Elk Antelope LNG project as well. And Kyoto Corp is understood to be one of the favoured contractors to undertake the FEED work on that particular project. And there's an FID that could be achieved in 17 months. And then in the Middle East as well, we are seeing INEOS, for example, make and actually going out to tender for a significant project at Jebel at the moment, a big EPC contract. And we've seen pre-qualified companies, Hyundai E&C, Saipem, McDermott, Sinopec, Technicas Unidas, amongst others, all being asked to submit bids by the 15th of August on that particular project. Now moving to the clean tech sectors, and first off that I want to focus on, and first off, offshore wind. What we are expecting to see between now and 2030, should all the projects proceed, and that's the key, should all the projects receive planning approval, etc., we could see upwards of 588 gigawatts of new capacity installed. That would require over $1.5 trillion of capital expenditure as well. The growth is huge in this area, and we're seeing ever increasing targets being announced by numerous markets. Netherlands, for example, increased its target to 22.2 gigawatts of capacity by 2030, and that's up from the originally announced 11.5 gigawatts. Germany has upped its increase to 30 gigawatts by 2030. So we're beginning to see a number of European players specifically increase their targets. We're seeing an ever increasing role of the major oil companies, energy companies, as they like to be referred now, making a move into the sector. BP, in particular in the North Sea, is making some sizable investments and planning for some sizable investments. But what we are continuing to see is that drive for local content for all of these new markets that are emerging in the sector. There are some concerns right now, though, that there are going to be supply chain constraints to deliver these projects. And my next slide will give you an indication of one such area. As I mentioned previously as well, we see continued losses for a number of the turbine suppliers. And where we're now also seeing offshore wind have a more significant role to play is in the coupling of green hydrogen for net zero targets. But I mentioned supply chain constraints, I guess supply chain challenges that we foresee. And what I've taken a stab at doing here is to give an indication of the number of turbines that will need to be installed on known developments between now and 2030. And let me put this into perspective. Now, between now and 2025, we'll see approximately 9,500 turbines. Foundations need to be installed, become operational. And that's a tripling in the number of turbines in particular that then become operational between 2024 and 2025. So this is a big jump between 24 and 25. We'll then see a steady wave of turbines to be installed before peaking again in 2030. What we do expect to see are large turbine sizes and capacities of up to 20 megawatts going forwards, but do we have the supply capacity just yet to handle such turbines? What is clear is opportunities exist, but a steadier build out will be required rather than a huge boom for the supply chain to be able to deliver. Industry doesn't want to build projects out 5 years. We want to try and build them out over 10, 15, 20 years. That's much more sustainable for jobs. It's much better for businesses. And so, to be honest with you, it's just simply better for the industry to hit its targets. Now, there is an issue with all of this. We have got to install all of these projects. We don't have the vessels. So how do we tackle the installation issue? We need to build more vessels. And this is what the majors, namely BP, are planning to do in terms of being able to deliver projects. And let's not forget as well that for offshore wind, that many of the wind farms installed in the noughties will be coming towards the end of life. So additional work will also be needed to be carried out on decommissioning or repowering these in the future. So an opportunity, but also some sizable challenges that need to be overcome for us to deliver this. And then finally, once again, just highlighting where we're seeing some of these sizable opportunities right now in the offshore wind sector, new markets emerging. Colombian government, for example, has released an offshore wind roadmap that outlines the country's potential and estimates a total capacity potential of around 48 gigawatts, of which 27 gigawatts is associated with fixed bottom projects and 21 gigawatts with floating. What we've seen is a significant player, Copenhagen Infrastructure Partners, signing agreements already to look at the installation and implementation of offshore wind in that particular market. Australia, not yet got anything installed, but we've already now recently seen an MOU that's been signed for development of the Star of the South wind farm. That wind farm could have a capacity of at least 2.2 gigawatts and feature 250 turbines. So a sizable project, but again, we haven't seen too much activity, certainly in offshore, in fact, no offshore activity, Australia, so a challenge there. And even closer to the UK, Italy, as an example, we are seeing some sizable floating offshore wind developments, and that's highlighted here by Renexia, who is looking to install a 2.8 gigawatt project off the island of Sicily. That project will be installed in some relatively deep waters between 400 and 600 meters. So again, not without its challenges. And then you've got to think of the power export cable system. So not only have we got the issue in terms of developing and adding the new turbines in, but you've got to then install all of the cables, etc. So again, wonderful opportunity, but not without challenges. And finally, on to the last two sectors, hydrogen and carbon capture. Hydrogen strategies are going to continue to be announced and are being developed and released on a fairly regular basis globally. Some markets will be focusing on delivering and meeting their domestic needs for fuels, whilst others will be looking at the export markets. And in fact, the UK is one of those markets that could potentially be an exporter of hydrogen going forward. This isn't just the domain of companies that have operated all their lives in, or had a history of operating in the energy markets. We're now seeing mining companies playing a more significant role in developments that are being announced. But once again, huge growth potentially, but can the projects be delivered with the current supply chain capabilities and capacities? And that's already been recognised, certainly in the EU, when it comes to the requirement to scale up electrolyser manufacturing. And recently, in a joint declaration signed by EU Commissioner for Internal Markets, Thierry Breton, and 20 CEOs from European electrolyser manufacturers, who have pledged to increase annual manufacturing capacity of electrolysers tenfold to 17.5 gigawatts by 2050. And that's a commitment that is crucial for the bloc to speed up the energy transition, replace Russian gas. So it's again, not without its challenges in scaling up. And I've just talked there about production. We've also got to consider the infrastructure needs for hydrogen going forward as well. So there's got to be some significant investment in pipelines, terminals, etc., to be able to handle the hydrogen in whichever form it's transported, whether that be in its liquid form, gaseous form, or as ammonia. And just finally, once again, a look at how we see investments, certainly on commercial scale production facilities, being dominated by green hydrogen, certainly in terms of capital expenditure. I mentioned previously new players that are entering the market, and Fortescue Metals Group, which is a subsidiary of Fortescue's Future Industries, has inked a pre-contract agreement with the government of Sierra as a signal to reaffirm intentions to develop a green hydrogen hub in the port of Peckham. We also see in Australia once more huge investments in Australia across all sectors. The Asian Renewable Hub, BP has agreed to acquire 40.5% equity stake in that particular project and will become its operator on this particular project. Construction's targeted to begin in 2026, with first exports expected in 2027. And one of the most notable projects that we're seeing moving forward, in Spain is going to be a key player in hydrogen potentially, is the HyDeal project. And project partners for this development have contracted Vinci Construction, Técnicas Unidas, and PowerChina Guizhou Engineering Company Limited to deliver the technical design, architecture, and supply chain of the first of the HyDeal España plants. So a lot of activity going on. And finally, I mentioned the Middle East having a critical role to play in this area. Oman in particular is one country that we're really keeping a close eye on at the moment. And there's the H2 Oman project located in Dhofar that will produce green hydrogen. But also we're seeing agreements being tied up with Middle Eastern players and major energy companies. So ADNOC is taking a 25% stake in the design stage of the H2 Teesside project. And BP and ADNOC will advance that project initially to the next stage of design and the pre-feed stage. So an awful lot of activity happening in that particular sector, and it doesn't stop there. Activity, an awful lot of it, and very encouraging for the supply chain. And we're seeing that again in carbon capture. Yes, it's the developed energy markets, developed industrial nations, where we're seeing the growth in the announcements that are being made in carbon capture. And there's very much that realization now that carbon capture is absolutely essential for us to be able to decarbonize industry. What is needed is government policy and financial support to be in place, and most significantly in this, where we're still waiting for some kind of finalization, is the business models need to be finalized for operators to make that step forward in reaching final investment decisions. We need to, as well as an industry, work better at collaboration. This is a cost industry. We need to be smarter. We need to set industrial standards globally to be able to deliver these global standards, yeah, like I say, to deliver these projects. And we're not just seeing these as one-off projects, they're cluster developments. UK has several of these right now, but we're also seeing announcements being made in the US, Port of Houston, $100 billion project, potentially multiple players involved. They are complex. What's very clear is that there are synergies with the existing supply chain, and as previously mentioned, it's the domain of the majors, of not just the majors and NSCs, but we're also seeing once more new players from outside of the industry beginning to look at how they can decarbonize their facilities as well. And in similar vein to the other sectors I've looked at, just to touch upon the project opportunities. It's worth noting not all the projects are multi-billion dollars. For example, in Egypt, Eni is planning to capture and store up to 30,000 tons of carbon dioxide annually in the Malaya field in Egypt, and that would require an initial investment of $25 million. Sorry. In the UK, Worley has been awarded a feed services for carbon capture facility at Phillips 66 Humber refinery. And this is part of the Worley, will work with Phillips 66 to integrate the Shell's carbon capture technology CANSOLV into the refinery and design the infrastructure required to export the carbon dioxide. And then finally, of these projects, and one of the most recently announced is in Thailand, where PTTP is looking to develop carbon capture and storage at its Arthit offshore gas field. And that follows a series of CCS feasibility studies. So activity is moving forward. We're still a little way off in terms of these projects being realized and actually engineering ground being broken, but we're seeing an awful lot of detailed engineering work currently happening on a number of these developments. So my final remarks, what does all this mean then for capital expenditure? What we are going to see is continued investment in oil and gas. We believe that there could be investment of up to $4.34 trillion between now and 2027 in the mature hydrocarbons and also mature power markets. Renewables is still large and will of course continue to increase, and really please remember this is commercial scale development, so we're not looking at rooftop solar or anything like that. We're looking at commercial scale developments. Renewables is large and will represent 32% of investments in projects due to be commissioned by 2027, and that will represent $2.23 trillion of capex. The energy transition is tiny in value terms, although increasing. It represents 6% so far over this next 5-year period. This 6% will still see investment in the region of $408 billion should all the projects move ahead. So I think in summary, huge opportunities and very exciting opportunities. And it's now really up to the supply chain to ready itself to deliver on these projects of the future. So I'd just like to thank Ross once more for his time today, and if should anyone have any questions, here's my email address. So Ross, I'll hand back to you.
Thank you. Thank you so much, Neil. That was fascinating. I have taken pages and pages of notes. I gave Neil an impossible job and asked him to look into a crystal ball and tell us what the future was going to look like. It really does feel as if you've given us exactly that, Neil. So thank you. On behalf of Leah and partners involved in Global Lifting Awareness Day, but also the companies that will have watched your presentation and will have gone away with renewed vigor for the opportunities that exist in their bits of the world. So thank you so much for that.
My pleasure, Ross.
As Neil suggested, any questions, you've got his email address. He will be much more able to answer them in a sensible way than I would possibly be able to. So Neil, thank you so much, and look forward
to you, Ross.
Yeah, soon.